Hello everyone, today we are going to review one of the most basic strategies that is out there, called ride the trend strategy. And as the name itself says, we are going to look and try to identify certain trends on charts, and based on trends define our trading plan. So the first step and the most important step by a mile in this strategy is to identify a trend. Here you can see that we have we are looking at a euro-dollar chart, at the 4-hour chart. So here you can see that we have a bullish trend. We are advancing higher until eventually we stop here and we create this almost double top at above 125. Then the second part of this let's say chart, you have a consolidation in the form of symmetrical triangle, where you have lower highs and you have higher lows, which means that the consolidation of the price is taking place, and the price is either going to push higher or is going to break down. And obviously the third part of this chart, as you can see, it's what happened actually is we aggressively broke down in this triangle and continue and pushed lower. So here what is interesting for us is we have a consolidation and since we are in a position to identify the trend, we are looking to then identify the trend up or down and base our trading plan based on that trend. Since we pushed lower, we are looking to enter into a short side, since we are looking to ride the trend, since obviously we broke down the triangle. So let's break down this trade. Pardon me. Let's break down this trade on a lower time frame. So here we are now at the 1-hour chart, and what you can see here is we pushed and closed below the triangle. We had a consolidation below the triangle, so it's a comfortably trading below the triangle. We have a retest, which is a perfect scenario, and this is when we are entering our trade here at 122, more or less 122.45. If you entered here, the greatest thing about the retest is that you limit your stop loss. So here you can only put like 15 or 20 pips stop loss, which means that if price would have returned to the triangle, then you're out, because what you're trying to do is you're trying to get a continuation to the downside. So here we enter our trade, and then based on the strategy ride the trend, we actually do what the strategy says. We are riding the trend to the downside. Here you can see we have this horizontal downward slope. You can see it here. So it's actually a horizontal resistance, diagonal resistance. Diagonal resistance, horizontal, but diagonal resistance that is keeping the price below it. So in this particular method, because unlike some other strategies, riding the trend is actually only a plan, so it might contain different methods in order to implement it. So in this particular method we are trading the triangle, so we broke down the triangle, and second part is actually we are also trading this diagonal resistance line. So here we are saying we are entering trade at 122.45, and as long as the price does not break above this horizontal line, we are into the trade. We are looking the moment that it pushes above this horizontal diagonal line, we are out of the trade. So we trail our stops. So you can see here we have a push to the downside, then we recover. We have a push to the downside, we recover, we have a push to the downside, we recover, but we are still in a trend. Why? Because we create lower highs, lower lows, lower highs, lower lows, all the way up to here, because here we have a break of the diagonal line, and actually if we trailed our stop, for example starting from here, we trail, push our stop lower, here we close the trade and we are in 300 pips, or actually more than 350 pips take profit based on risking 20 pips. Obviously this is a great example. This happens once in a very long time, but it happens. You could have also traded against the 100 moving average. You can see here the blue line, which in this moment coincides with this diagonal line. So you could have said, as long as the price is below, I'm going to stay in my trade, and once it breaks the line, I'm going to exit my trade. So in this case you would have also been 320 pips take profit. So we're riding the trend. As long as the trend goes here, we break the trend. Why? Because we create higher lows and higher highs. This again another chart which is a bit different because now it's bullish, but we're using the same method. So here we have a channel, we have an upward channel in the dollar yen, which means that the price is creating higher lows and higher highs. So as soon as you identify that we are in a channel, for example here, we enter into the trade here. You see, we enter into the trade, let's say 106.90, we are long, and then we say as long as the price stays in the channel or breaks above the channel, we are into the trade. If we break here, we're out. So if the price immediately breaks, then we will probably lose, let's say 20-25 pips. That's what you risk. But as long as the price goes up and creating lower lows and higher highs, higher lows and higher highs, then you're actually just moving your trailing stop below the channel here. You of course you're not getting out because this is only 5 pips violation, and if you're smart you always keep 15-20 pips below the support line. Most probably you'll be out here. If you like really want to be meticulous, if you want to be more aggressive, then you will also allow this to happen, because this is here we are talking about 15-16 pips, not more. So if you put maybe a stop loss here, then you will also could ride another leg higher. So you will still be in a trade, and as we said, you enter the trade in 107 area, so it's 400 pips move. Because what you do, you say as long as the price does not break this channel, comfortably close trade below or push downside, I'm going to be into this trade. Or the same as in the euro dollar chart, as long as the price is below or above both 200 and 100 moving averages, I'm out. So maybe here, yes, you could have been out because the price is below 100, below 200 and below the channel for some 10 pips, but still in that case we are looking at 230 pips take profit. So one of the more basic strategies to implement, not so hard. The most important thing is to ride the trend.